Welcome to Explainomics from MarketWatch, where we explain everything around the intersection of business, finance, and everyday life. It's tax season, so today we're going to talk about how to reduce your tax bill. Now, there are many ways to cut your taxes, and no, I don't mean by lying or cheating on your tax return. That is not legal. I'm talking about legal ways to cut your taxes. I'm going to show you how. The first way to cut your taxes is to use deductions. Deductions reduce your taxable income, so lower income, lower taxes. We have two types of deductions, the standard deduction and itemized deductions. Lately, the standard deduction has been pretty high. It's almost $13,000 today. So for most taxpayers, it doesn't really make sense to itemize. Just take the standard deduction. However, there are some deductions that can be used on top of the standard deduction. Those are called above-the-line deductions, and they apply to specific occasions, so you need to know if it applies to you. Things like tuition and fees, certain retirement contributions, alimony payment, certain business expenses. You need to know if any of that applies to you and take advantage of it. The next thing you can do is use tax credits. Now, those are different from deductions because deductions lower your taxable income, credits lower the tax itself. Let's use an example. Let's say you have $1,000 in tax deductions. That means that your income will be reduced by $1,000 and you'll save whatever percentage your rate is of those $1,000. So if you are in the 37% tax bracket, you'll save $370. If you had $1,000 in a tax credit, you would save $1,000 in taxes. That's huge, much bigger than the deduction, so you want to use tax credits. Some typical examples most people know about: child tax credit, if you have young children, tuition and fees, education credit, but there's so many more that people don't know about. And how can you find out? Just go on the IRS website. They have a comprehensive list. You can figure out what circumstance applies to a credit and applies to your life. The last thing you can do to reduce your taxes legally is use tax-advantaged retirement accounts. Most famously, the 401k. Most people have it at work. The employer provides that. But if your job doesn't provide one, you can use an IRA, individual retirement account, which you can open and use. You don't need an employer to do that for you. Now, how does this help with your taxes? Every dollar you contribute to those accounts lowers your taxable income, so you pay no taxes on it. On top of that, as the money gets invested and grows in that account, you pay no taxes on those gains either. So it's a double tax benefit, and we should all be taking advantage of it. By using tax deductions, tax credits, and tax-advantaged retirement accounts, you can legally cut your tax bill and keep more of those dollars. For more content from Explainomics and MarketWatch, make sure to hit the subscribe button and keep watching videos from the Explainomics playlist, and I'll see you next time.